Hey guys, today with me is an amazing lender. Her name is Patty Newby. She has a very interesting program that I became curious about because so many of my clients who are trying to buy a home are struggling to find a down payment for their home. They are happy with their mortgage payment, is the down payment is what's difficult for them. So today I found this very special programs that I'm going to role play with Patty because her program isn't like anything that I've ever seen. And we will see if this will help me to secure the home of my dreams. I'm the buyer today with very little money in my bank account. So, Patty, tell me just very quickly what company you're with and what is the name of the loan program that she told me about.
Awesome. Well, thanks for having me. Thanks for role playing. This will be fun. I'm Patty Newby with Thrive Mortgage, and we are the loan designers. I'm the branch manager, and we have a wonderful team helping our clients get into a beautiful new home.
Okay, so you told me you have a very special type of a loan that allows me to get into a house with $99. And I told
Yeah,
you that cannot be possible. So
it,
you challenged
it is.
me to ask you about this program. Can you just give me a very brief view of what is this loan program about?
Yep. So it's called Thrive Max for you. It's for first-time buyers, second-time buyers, or anytime buyers. What it
Okay.
does is it allows us to do 100% financing. So what the heck does that mean? So let's say you have found a beautiful home for $300,000. Normally you have to put some money down. This is 100% financing. So if your purchase price is $300,000, we are going to give you a loan for $300,000.
So basically it is 0% down, correct? At this
Correct.
point. And it can be used. So I am a first-time home buyer and I was planning to use, I was not sure which loan to use. Somebody told me about first-time home buyer loans. I'm very confused. Can you tell me what would be the
Yeah.
benefit of using this
Well,
loan?
that's a
Mhm,
great question.
mhm.
So roughly, I'm going to make up a number here, just pulling it out of my head.
Okay.
We have about 10 first-time homebuyer programs.
Uh-huh.
Let's narrow that down a little bit more. So a lot of clients use FHA for first-time homebuyers, but you can also use a program called conventional. Either one works. What does it mean? It's a difference between, a blue car versus a red car. It's still a car. Both are great programs. But we're going to narrow that down just a little bit more. So on a program with 100% financing, there are bond programs out there. There's different county and teacher programs. And then this little niche thing we have called Thrive Max for you. I like those other programs, but sometimes those other programs can go away without any notice.
Mhm.
If, for example, a county has a bond program, when all that bond money is used up, poof, it's gone. Might be gone for a week or a month or 3 or 4 days, but we don't have any advance notice. What's different about Thrive Max, it's a program not focused on bond money. So if you get a pre-qual letter, I'll tell you about that later. When you're out looking for a home, you can know that it is still there, so we can still give you some peace of mind and get the keys to your new home in your hands. So Thrive Max for you is a great program that does 100% financing.
Now so before in my previous scenario, I was a first-time home buyer, right? But in this case, let's just say that I'm applying with my husband and my husband already owned the home. So
Okay.
now we were told that we're not qualified for a first-time home buyer, and they're
No,
told that we need to bring 5% down payment, which is with $300,000 house. That is a huge amount of money.
it is.
So what can we do in our situation?
Yep. Thrive Max for you
Uh-huh.
is first time buyer, second time buyer, or anytime. So that's the other thing I like about the program. It offers flexibility. So in the case where your husband owned a home
Mhm,
last year or
mhm.
2 years ago, you can still go ahead and use Thrive Max for 100% financing.
Wow. And if you don't mind me asking, do we need to qualify? Because then do we need to qualify for, like, what is our credit scores need to look like to qualify for that?
Great question. So let's say you're buying an existing home, right?
Mhm,
And it's going to be ready in a couple of weeks.
Mhm.
Your credit score needs to be a 580 credit score or higher.
That's it.
That's it.
I
Now,
don't need a 700 or 800 credit score.
nope. Now there's some more details to qualifying, right?
Okay.
So let's talk a little bit about those. So first of all, to use the program, you do have to take a home buyers class,
Okay.
right? Just because we're trying to do the due diligence and be financially responsible, and we want all our clients to understand that, okay? The second thing is you do have to have some assets for your closing costs. So the $300,000 home, we're going to give you a mortgage for $300,000, but now you have to pay some closing costs. How much? I don't have that off the top of my head. It does depend on your credit score, and you can also buy the rate down. But roughly, it's about 4.5% of the loan, but that's going to cover your closing cost. That's going to cover your escrows. I'll get to that in a second. And that will put you in about $99 cash to close. So what that means is the whole thing totaled up is when you go to the company called the title company to close on your loan or get the keys to your home, you're going to write a check for approximately $99. Now, when I say approximately, what happens if you pick a real expensive insurance company or you close on the 1st of the month versus the 25th of the month? That will vary. But if you close about the 15th of the month, it'll be about 4.5%. Now, I used a word in there that sometimes our first time or second time buyers need a little clarification. It's called escrows. Escrows is the property taxes and homeowners insurance that we collect for the first year, but also subsequently a little spare money that we call reserves. So if you roll that all in, it's about $99 cash to close. I will say there is an appraisal required as well. And because the appraiser is a third party company, you do have to pay the cost of appraisal. You can put that on your credit card or debit card. But when you get the keys to your home, you go to the title company, $99 cash to close.
I must say, this is extremely, extremely unusual to
Mhm.
hear that.
It is.
How long has this program been in operation, and do you expect money to run out? Because I know that some lenders announce the program and then they run out of money for the program.
Well, this is not a typical bond program where the money runs out. This is a program like FHA or VA or conventional loan. This is actually a program. I'm very blessed to work with an amazing company called Thrive Mortgage, and we really try to think outside the box and put products out there that our clients need. This is an FHA loan limit capacity. So in most counties, because it was just changed, the FHA loan limit was $563,500. There's a couple of counties that's a little bit smaller in. So in the DFW area, it's the 563,500, and in certain other parts, just a little bit lower. Okay.
Gotcha.
Let's also talk about qualification as far as debt ratio. Debt ratio is an item that all lenders care about. So here's what debt ratio is. We look at your house, the house you want to buy, caused your housing expense, and we look at the monthly payment of all other debts that appear on your credit report. Car payment, credit cards, child support, look at child support in a minute, and student loans. We add that all up with the monthly payment, and that's called a debt ratio. Okay. Since I was talking about child support, let's address that now. Any child support payments would be counted there against the debt ratio because that's part of your monthly bill. Or if you have any outstanding note loans where you owe some money or some IRS payments, those are going to be counted in your overall debt ratio. But with Thrive Max, this is a little bit more lenient. And we'll talk about why you care about that in a few minutes. But the debt ratio goes up to what is approvable for the system. So sometimes that can be 45%, sometimes it can be over 50%. Once we get the client to apply, or once you apply, Elena, we'll be able to tell you, hey, you're pre-approved. That is
Now,
part of the qualification process.
could you also clarify to me, if I was to apply for this, how long would it take for me to get how long would it take for me to apply, and how long is the approximate pre-qualification process takes?
Yep, great questions. So how long does it take you? It depends on how fast you can type. Probably 10 to 15 minutes. If you have 5 or 6 or more jobs, that takes a little longer to type it all into the system. Now, my team is on call 7 days a week. We do have dinner with our families and church on Sunday, but we can get that done in a couple hours. Let's talk about the different levels of pre-approval because it does go to peace of mind and the comfort and speed at which we can react. So when any client applies with a mortgage company, we ask the client some questions, and technically you can issue a pre-qualification letter. My team doesn't do that, but technically you can. And all that means is based on what you typed in or our clients typed in, we can close a loan. Okay. The problem with that is most clients don't know the underwriting or the engineering type of details and don't know how to calculate their income. Well, gee, I don't know how to calculate my taxes. I'm not a CPA, right? So let's talk about that and peel it back. So salary is pretty easy, but if a client is hourly or overtime or commission or bonus and any changes of that, if they have received a promotion within a year or about to receive a promotion, those are things we want to take a deeper dive on. So my team will ask some very specific questions, all within that first 15 to 30 minutes after they've applied, sometimes an hour. It's very quick. So most clients, for an example, if you have overtime and you're normally used to making $400 per month for an overtime, we are going to actually do an average. Well, you may not remember what your overtime was for your husband the year before. So it may take us 30 minutes or an hour or two to get that information. What we won't do is leave you hanging as a client because you're like, hey, I want to go and buy a house tomorrow, right? But we also don't want to break any hearts. So if a client's on the bubble of getting pre-approved or not, we're actually going to get something called a verification of employment back from the client, or we can get a couple year-end pay stubs, however, whatever's fastest, right? Because sometimes on the weekend. And we're going to try and nail that down, and we're going to turn that into a conditional approval letter.
Now, can you tell me what the
I'm sorry,
difference?
a pre-approval letter, pre-approval letter.
Okay, then, because conditional approval letter is slightly
I'm
different.
gonna go in that next.
Okay, let's go ahead. So, just to break it down for like, let's kind of go step back a little bit more. So let's just say that me and my husband are searching online, and we see a house that we really like, and it sounds like it's going to be a great fit for us. When would be the best time to contact your team? At what point in the search?
So if you think you're going to buy a house in 6 months, call us now.
Okay. Why now? Why? It's
Great question. Because sometimes clients have some surprises. Let me give you a couple examples. Fortunately, there's a lot of IRS fraud out there. Or sometimes a client may have owed the IRS a couple $1,000s, paid it, but it's not cleared in the guts of the systems, right? So the faster we get the information, the more we can be prepared without surprises, okay? And the more we have our clients prepared too. So, Elena, I know you told me you had a great credit score, but let's say we pull your credit and it's a 636.
Okay.
We can run some reports behind the scene because there is a payment difference between 636 and 640. So maybe if you do things sooner, we can get prepared and share with you how to get your credit score up a little bit to save some money. Okay.
Gotcha.
Or maybe Aunt Jen gives you $5,000 for Christmas or $2,000 as a Christmas present. Thank you, Aunt Jen. The problem with that, she wrote you a check and you popped it in your checking or savings account, which most people would do. We have to source those large deposits. So if we get and chat with clients faster, we can make for a quicker and easier process for our clients to get keys in their house. So Elena, you told me you got a nice Christmas check from your Aunt Jen, $2,000. And I know we're making up numbers here as an example, but we now have to go back to Aunt Jen and source that deposit. Well, she put it in her checking account. But when we get her checking account, it says, oh, she pulled it out of her 401k, or she got it from her husband. Now we have to go backtrack and all the paperwork to source that money. So it just keeps it a little easier. Personally, when we're doing a gift, I like to just wire it to the title company, keeps it a little smoother. We can work with all those situations. But if I have to keep coming back and asking Aunt Jen for some paperwork, Aunt Jen might be just getting a little frustrated. And we want to have a nice, smooth transaction. So I'll share some do's and don'ts with you. I had one sweet client just a couple months ago get married 2 days before closing.
She thought it would be great, right?
And that was very sweet. Close on the new house, have his wife, he and his beautiful wife get their beautiful new home with keys to it. But that way we can educate our clients on, hey, if you're going to make changes in your life, that might be okay, but call us so that we can be prepared to have an amazing experience. We get a lot of our reviews that, wow, you were great, you were easy, we were fast, you're awesome, blah, blah, blah. But every once in a while, we get one that, not so good. And in one recent that broke my heart, but that's life. This particular client said they had to keep sending us paperwork. They did. We were closing in 14 days. They had to send it 5 or 6 times, but they forgot to put their name on the bank statement. So, Elena, when you send us and upload securely your paperwork, I believed that it was the client's money, but didn't have her bank on it, her account number, her address on it, her name. So it's a screenshot. So my team had to keep asking her for that same paperwork. So the more we're prepared, the better. Now, if it is a Friday afternoon and you want to go out and find a house on a Saturday, we can work with that too.
Which is typically what I want to do.
Right. The difference is when you contact your fabulous realtor, the realtor is going to say, are we pre-qualified, pre-approved, or conditionally approved? Those are deeper levels of approval. So we want to at least go out with a pre-approval. That's a little stronger to the seller. And the next thing your realtor is going to say is, how fast can we close? Well, we can close in a little 8 days. We typically close in 14 if we want to close quickly. But the more paperwork we have, the faster we can close. And then the next thing your fabulous realtor is going to say is, how many days do we need in third-party financing? That's to go from that second level of approval to legal approval called conditional approval. Well, if we have your paperwork, we might send it out with a conditional approval, and the answer is 0 because we've already done the work. If you're fast on your paperwork, can you also help me with your husband's paperwork? If so, we can maybe do 2 to 3 days in third-party financing. But if you're about ready to take a trip and you're not going to be available to help with the paperwork, then we have to call our client and say, hey, when can you get us the paperwork? The lower the days, the potential faster to close, doesn't mean you have to do that, but it gives our clients the power to do that when they're negotiating that contract.
Question, as you were speaking, something came to mind. So you said that our closing costs are going to be about $99, correct?
Whatever 4.5% is of $300,000. Let's get the calculator out there. Yes. But that's not just closing cost. That's your days of interest, and that's your escrows, which is your taxes and insurance too. So it'll be about $13,500 on a $300,000 house if you want to get $99 cash to close.
So this is
and
what I get.
On your credit score, it might be a little less, but roughly speaking.
So this is what I'm not getting. Do I need to bring $99 with me, or do I need to bring $13,000 with me, or
no.
$1,300 with me?
Good question. Let's break that down. You would bring $99 when you walk into the title company to get the keys to your hand. Okay. Let's talk about other money that you'll need through the process.
Okay.
We're going to need to have an appraisal.
Okay.
Now, appraisal is, hey, you're buying the house for $300,000 based on what is sold in that neighborhood. What does a third party, independent, licensed appraiser think the house is worth? Is it worth $300,000? Is it worth $299,000? Or is it worth $310,000? If it's worth more, we are under no obligation to tell the seller. And oh, by the way, we're not legally allowed to give that to your realtor as well. we do let you know as the client, Elena, that you can send it to your realtor, but we cannot send it to the seller or to your realtor. That is your document. So you will have to pay that out of pocket.
And that's
Depending,
approximately $500, right?
it's
$600.
right now it's running about 600, 650.
Okay.
Depends
And you
on
said I
how
can
fast.
put it on my credit card, right?
Yes, ma'am. Okay. And we will send you, my team will send you a copy of the third-party invoice along with the appraisal so that you're putting it on your credit card. Hey, where's the bill to match it? We send that out to you.
Okay, so
Okay.
I'm spending $600. So I'm starting to count the money. Go ahead, $600.
600. Now, if it is an existing home, your realtor is probably going to recommend for you to get an inspection.
Okay.
An inspection says, hey, what's broken on the house? Or not what's broken, what you might want to be aware of. That is between you and your realtor. Your realtor will probably make some recommendations. And if, let's say, the hot water heater is broken, they may negotiate to have that hot water fixed and paid for by the seller. We're not part of that. We do not need a copy of that, but that is money that you will have out of pocket. Personally recommend getting an inspection. I know I always do. Okay.
So I would say $500 for inspections, right?
Okay. Yeah. And again, I don't pick out inspection. That
Mhm.
might be a little on the low side right now. I
Mhm.
would conservatively pay 600, but I don't
Okay.
have any inspectors that I refer to. That'd be a realtor question.
Okay. Mhm.
Okay.
So it is 500, so 600 plus 600. Okay, what other costs do I need to take
Yeah.
care of?
Talk to your realtor about something called option money and earnest money. Okay. Now, let's say you put some option money down of $100. You are going to either get that back or have it reduce your closing costs. Maybe instead of $99, you bring nothing because you already put some option money down.
Okay.
And whatever you negotiate with earnest money is up between you and your realtor and the seller.
So let's just say that we negotiated $200 for the option fee.
Okay.
And let's just say that we have negotiated $2,000 for earnest money, because I know that they're going to ask for a little bit more for the earnest money. Okay.
And that's typical today. And if I was selling a house and taking it off the market, or our clients would, right? I'd be asking for that too, right? So that's very reasonable.
Okay.
Now,
what else?
Yep. So what happens is if you're only bringing $99 cash to close and you already put in $2,000, what's happening to that money?
Yes.
Do you want to use it to buy the rate down? Or maybe you want it back because you want to buy some furniture. So
Okay.
that could be refunded back to you when you close. So you'd bring in your $99, okay? And you have $2,000. The title company is probably going to want to net that out, and they're going to probably wire you or cut you a cashier's check for $1,900 back. That would be worked out.
Question, what if they ask me to pay for the title policy?
That's between you and the seller, your realtor.
So that's not a part of that $99, correct? So that optional
No,
title
it is.
fee?
It is a part of that. So
Is it?
that 4.5%, that's part of the reason it's a little higher. Okay. So title insurance is part of closing costs. So we're assuming in that 4.5% credits that we need the seller or builder to roll in. That covers title, that covers a new survey, and that covers everything but appraisal on our side.
Question. Okay. So are we asking, so let's just say so far I'm without the title policy, because I know the title policy, if I went for a title policy on a $300,000 home, the title policy, let's just say costs $2,000. Let's just throw in that $2,000. So let's just say there's $2,000 worth of title policy, and I have not even purchased my insurance, right? So my
that includes everything. That 4.5% includes the first year of your home insurance, and includes a title policy, and includes a new survey.
Okay.
So literally $99 cash to close. Let's say 600, 650 for an appraisal on your credit card, and then an inspection.
Okay. So far with just the inspection, appraisal, earnest money, option fee, and a title policy, I'm up to $5,400, right? So that is the, are you going to ask for the credits from the seller, or how do we get this $5,400 covered?
Let's break that up a little bit more. Okay. So on the $5,400, you can get the $2,000 back.
Correct. So we're getting the 2,000. In fact, we're getting both 2,000, which is earnest, and we're getting 200, which is option fee. We're
Yeah.
getting them back.
So the
Correct.
better way to say that is, let's get out our calculators
Correct.
together.
So we had
$99
okay.
cash to close,
Mhm.
plus let's go high, $650 on an appraisal that you
Okay.
put on a credit card, and
Okay.
$600 on an inspection. That's about $1,349
Okay.
total. That's
Correct.
what I would expect out of pocket. Now, let's go back to your second part of your question. So we have 100% financing over here, $300,000. Now we have 4.5%, and in this example, 13.5.
Mhm.
So we have all the closing costs. That's where that number comes from,
Mhm.
and all the escrows. That's
Mhm.
also your taxes and your insurance and your reserves and your days of interest, all
Mhm.
that. And that includes a new title company or new title policy,
Mhm.
and assuming a new survey.
Mhm.
So in $13,000, we would ask the seller to pay for it.
Okay. So we're actually asking credits from the seller.
Yes, ma'am. And it can be
Okay.
done in two different ways.
Okay.
This can be done with a seller or with a builder.
Okay.
So we
So
can ask them to do it.
let's just break it into two scenarios. If I'm working with a seller, I'm just letting them know that yes, I'm happy to buy your house at $300,000, but we need 13,000 or whatever $1,000 in credits, correct?
Mhm.
Okay. And
Okay.
then if it is a builder, we
Mhm.
just approach the builder and we have the same negotiation. Is there any difference between in this outcome of our calculations between the builder and the non-builder?
Yes. So, yes. So let's go back and peel that question back just a little bit more. Okay.
Okay.
So let's say you have a seller with $300,000 and we
Yes.
subtract off 13.
Correct.
That seller is going to net 287,
Okay.
right? What happens if the seller needs 290?
Okay.
Okay.
Yes. Let's imagine that.
Right.
Okay.
So what that means is you, as my client, $99 cash to close. Ooh, you're $3,000 short. Okay. Because that money is coming out of someone's pocket. And if your realtor puts that in the contract that they will pay $10,000 versus 13.5, there's a difference there. Makes sense so far? So what we can do is bump up the sales price.
Okay.
So to get that $99, we still need 13,500.
Correct.
But the seller's like, I'm only going to give you 10.
Okay.
But you have a mortgage concern, right?
Mm-hmm.
You're trying to buy a beautiful new house because you're tired of renting or whatever,
Mm-hmm.
and you only want to write a check for $99.
Mm-hmm.
We're going to ask the seller to bump up the sales price. So instead of offering 300,000 for the house, you may offer 303,500.
Mm-hmm.
Now,
Understood.
here's the good news. This is a lot of information for a first-time home buyer. So once you apply, we will offer a smart home savings plan for you, where we're going to document all this. We are going to go over the payment and the home insurance and the taxes to make sure the payment. We're going to be working really closely with your realtor once you find a house, because your realtor says, the house is not going to appraise for 303. It's only going to appraise for 301. So how do we still help our client? Okay. There's a couple different ways to do that. We'll get into that during the presentation. But this is why the sooner we buy a home, the better, or the sooner we apply, the better it is. Because if you apply on a Friday, which I know you're going to apply in another few minutes, and go out and look in the morning, we may not have time to get on the phone with you and your husband and put all the options to offer you some peace of mind. Because there's nothing worse than a client, they found the absolute house and they're like, what's the payment? And we're like, X. We're like, I don't want that X, whatever it is. Well, I can give you Y and Z too and ABC, but we haven't had time to put that together for you. And then your realtor's trying to write the offer up, and now it's multiple offers, so we have to hurry. So if we can just do a due diligence, most of our clients don't wake up and say, I'm going to go buy a house today without some pre-thought, right? So call Elena because she's your favorite agent. She's going to do a great job for you. And then we'll work in a little time. Even if we can have a couple days, that's better. Let's talk about builders though. Go ahead with your question.
No, let's talk about builders because that's
Okay.
important. Yeah, go ahead.
So same thing with your builder. For this, we have to ask the builder for 13.5. Maybe they're willing to do it, maybe they're not. Again, we can bump up that sales price a little or a lot. Now, remember I said we had to get a third-party neutral appraisal? If we're going to bump it up to get that $99 cash to close, the house has to appraise for whatever the sales price is. If you don't, you can pay the delta, and there's other things we can do, but in general, that's how we do it. Now, one of the questions you ask me is, are the closing costs, that's what you're really asking, the same with a builder versus an existing home? It depends. Who pays title? It depends.
Typically, the builder pays the title.
Well,
at least those builders that I have encountered.
Yeah, I know. And I know we're going to break on this, but with parks, we pay the title insurance, okay? But not on the $99 program.
Okay.
So it depends, okay? So the builder can pay title. When you buy an existing home, we can reuse the survey if it's valid. Now, I know you're a first-time home buyer. We're going to knock out some of these terms later on, but here's a survey, what a survey is. If you are looking from an aerial position, top down, a survey is a piece of paper with a square on it. That denotes your side yard, front and back. And then it has all the lines where you can build and can't build and things like that. A survey goes out there, they put their seal and their stamp on it, send it to you. It's a very important document. So will the builder pay for that? Maybe. Will the seller pay for that? If they have one, 99% of the time we can reuse that. So that might save a little on the closing costs, but I say over a couple $100, go get the home you want.
Gotcha.
Right?
Last question. So are there any difference between my interest rate for a non-100% financing and 100% financing loan?
Yes, there are.
Okay.
So how much? It depends on your score and what the market's doing. So this is a FHA product, and it runs just a little bit more than an FHA loan. I'm going to make up a number. This is a wild example because I know we were just talking about 300,000 here on the fly, but it could be $17 more a month, $10 more a month. But you can still buy the interest rate down. So it depends, but the overall answer is yes, because it's a 100% loan versus FHA is 3.5% down. So just a little bit more.
It's just a slightly higher interest rate, but is it the buy down of the interest rate still available?
Yes, it is.
Okay. And then
So
question, how quickly can I refinance? Because I know that for some FHA products, I could not refinance for, I believe, 3 years. How about the refinancing on this one?
Yeah, see, this is the beautiful thing. It's not that bond program. So you can refinance, and I will share, my team has a option for appreciation by design is what we call our program, but we're going to be watching that. Here's the cool thing. If you're on the title, like you've lived in your home for 12 months and rates drop, when we go to refinance the house, okay, any natural appreciation in a home is going to count on your side of the balance sheet. Let me give you an example. Okay. Let's say you bought your house for $300,000. I'm now getting out my calculator, and you've made 12 months worth of payment. Make up a number. Maybe you owe $298 on the house now. Okay. Most of the time, you are going to pay interest those first few months versus principal. So hold on for me for a second. Okay, so when we convert to an FHA loan, right? But there'd probably be no reason to do this. Hold on a second. This would, well, if the rates drop, we'd want to have about 3% or $10,500 in FHA, in equity in your home to refinance. And if your home in that year has been on the been appreciating and you've been on the loan for 12 months, then we can refinance you at that point. However, most of our clients that are on any type of FHA program, FHA is a great product. Put my own family on it. okay? But it could be because the debt ratio is a little higher that we went over earlier. Maybe your credit's okay, but not awesome, okay? Or we want that 3.5% down, or in this case, 100%. So what we're doing behind the scenes is working to save you money. So maybe rates drop in 12 months, but it doesn't make sense. And we go 18 months to drop. Not that you have to wait that long, but there's no reason to refinance in January and then turn around and have rates drop again and refinance in August. That makes no sense. So it's our responsibility to have to save you money. So what we do with most of our clients, or all of our clients, is we have a game plan to maybe get off FHA. There are several components of your house payment: principal and interest, property insurance or home insurance, property taxes, and mortgage insurance. So if we're going to refinance, what situation can we fix in 3, 6, 12 months that required us to be on that program to begin with? Because maybe when we convert from FHA to conventional, maybe we have some technology and options in the background to get your score up. We'll help you monitor your debt. We're going to work on plans to acquire equity so that when we do move you off FHA, you can go onto another product to save you money, if that makes sense. So we're working all sorts of combinations. And as you apply, Elena, you and your husband, we'll work through a short-term and long-term strategy. So when we believe rates will drop in late 24, 25, right? We'll be prepared to save you the most amount of money. Okay.
Now, I did come up with one last question, and then we have to go, is since it is an FHA program, I'm assuming that the home would have to qualify for an FHA loan, which means no foundation issues, no roof issues, etc., correct?
Well, yes, but that's a little not quite right. So let's
Okay.
peel that back a bit.
Okay.
In the old days, there used to be a big disparity between an FHA and a conventional loan for qualification as far as inspections go. Now, remember, we don't see the inspections, but your realtor is going to want to protect you. There's things called safety issues: foundation, roof, termites, water issues, wood rot issues. You can't have a window that's painted shut for fire issues. I'm probably forgetting any, but those are all the same today. But your realtor is not going to want you to move into a home if your water heater is broken, or there's foundation issues, or you've got a big termite problem going on out there, okay? So all those will be handled, but really today we're not seeing many issues, if any, between FHA inspections and conventional, okay?
But from a standpoint of appraisal, the appraiser who will come out will be an FHA appraiser, right?
They will, but they are highly skilled FHA
Mhm.
appraisers, and that should not make a difference either.
Okay.
What will happen is they do have a couple reports to do additionally on FHA appraisal, but they are all looking at the value of your home. We have amazing appraisers that we have to pick from, and we don't pick, it's in our pool. So you don't get to, oh, I want Jim versus Sally. No, that does not how it works. But we have talented people for the area. Remember, their license is on the line, right? And they're going to look at the comps, what has recently sold in that area. Let's say something's funky going on in one area, they're going to find that out. And that's why it's good to send the appraisal to your realtor if you want. Okay. That's why you want to have an appraisal done.
Gotcha. I don't think I have any other questions. So I know just a little bit of a preview for you guys who are watching. Patty is basically a great resource for very unusual loan programs. And I'm just going to give a little bit of an announcement that she has yet another very unique loan program called Home to Home. Patty, we're not going to get into home to home, but that program will make those of you who currently own a home and are very concerned about the logistics of selling one home and buying another, that program is going to make you smile. It's going to make you happy. So without further ado, Patty, how can they contact your team if they would like to go ahead and proceed?
Start at theloandesigner.com. It's
Right.
START at the loan, LOAN, designer, DESDESIGNER.com. And the office number for phone calls or text is the same, 972-526-5636. Hold on, I'm gonna check that. I know it off the top of my head. And I will say is, yes, we do the outside the box thinking. Yes, that number is 972-534-5626. But we also do an amazing job with consultations and designing the loan to save money, because we're going to shop 30 plus banks for you as well. But if you just need 3.5% down or 5% or 20% on conventional, I'm very blessed. My team is amazing. I'm the branch manager. We do have a little over, I think, 802 online reviews as effective as today. So start at the loan designer, call your favorite agent, Elena, and give us a call. Thank you much.
Thank you so much, and I'll see you guys. So for those of you who would like to proceed, I'm going to have Patty's contact information in the description of this video below. So make sure to click. And also, once we have the video for the home to home program available, this video is going to pop up at the end of this video as your notification. Do not forget to click on it. Thank you so much. If you would like to connect with Patty, she is the awesome resource, and she will design the loan to fit your lifestyle and your financial needs. Not everybody does that. Alrighty. Thank you so much, guys, and I'll see you at the next video.